Sending data. Sending data. I got a little wine for today's episode. A little bit.
A
of
little wine.
Little wine down Thursday.
Oh, you got it at the vineyard when you went last week?
No, I didn't end up going. We ended up going to a bar in Middletown. So we didn't end up going to the winery. We hit the bar. Went to Eli Cannon's in Middletown, which was nice. You know, supporting the local restaurant, especially because they've been absolutely devastated during this whole experience. Although Eli stayed open, they stayed open the entire time. So I think that they were able to get it figured out. But
they probably had Uber Eats or something like that, right? Set up.
Yep,
Things
Uber
like
Eats. And I feel like they've got a pretty loyal customer base too. So they didn't have any problems. J. Timothy's is another restaurant up here too that I noticed they still were packed. Like they still had a ton of people coming.
Really, J. Timothy's.
Those dirty dirt wings, dude.
Yeah, but was it like how many people actually went there? Because that place is always packed.
Yeah.
Right.
Yeah.
Like completely full.
They do the.
So I'm sure that if they did it at half capacity, that's a big loss of revenue.
They do. Yeah, they do the. They had the social distancing going on and stuff.
That place is always packed. And it's huge too. It's a huge restaurant. It's not like it's medium size and that's why it's packed. No, it's like a huge restaurant.
Yeah. You know what, Mike? I'm gonna have you hang up real quick and then just click the link and come back in because you're lagging just a little bit on my end.
All right.
What's going on, everyone? Give us 25 more seconds here, and then we're gonna get this episode going. We're breaking down Jerome Powell's speech. We're gonna be talking inflation, and we're gonna be talking about how you can prepare for that and save more money and make more money in the future. So just one sec here. Getting Mike back on. There he is.
How about now? Can you see me? Can you hear me?
Oh yeah, we got you now. We got you now, dude. Perfectly. Right before the time too. Right before the time hack.
Mm-hmm.
Boom.
Here we go.
0. All right. I'm gonna give it the quick plug. What's going on, everyone? Got Joe Rapp here and Mike Fig. Today's date is Thursday, March 18th, 2021. Thank you for joining us again for yet another episode of The Nonconformist. We left all the links in the description. If you want to subscribe to our email list to get email updates when all of our content comes out, you can click that link, put in your email address, and you get subscribed. In today's episode, we're going to be talking about Jerome Powell's latest speech on interest rates and inflation, and we're pretty much going to be having a general conversation, breaking that speech down, what it really meant, what the inflation numbers really mean, and then we're going to be going over again how you can prepare for the upcoming storm of inflation. This is a topic that we talk about quite a bit, but I think it was important to bring it back up again for today because the speech was yesterday, and 2020 was a big year for inflation, and 2021 seems like it's going to be even a bigger year for inflation, and we're harping on it a lot because what does inflation mean? It means that all of your dollars, all of your money is going to be worth less because they're creating more of it. So really important topic, really important discussion that I think we got to keep talking about. That's it, Mike. I'm gonna pop my wine open here. So, like I was telling you before.
What is that?
Got a little vino. It's a Sauvignon Blanc. It's a white. Nothing fancy. You know, I haven't really gotten to that point yet with wines where I really can tell the difference, or I'm not really sure what's good, what's not good.
Wine's the best, bro. You got to drink more of it.
Yeah. And then I guess remind the audience too that if you got any comments, go ahead and plug them into the comments section. I've got the comments window open on my side. If you've got any questions as we go through today's episode, let us know. That's what we're here for. We're trying to spread the love spread awareness while documenting history as it happens. But what's going on, Mike? How you doing today?
Good, man. It's a rainy day, but we're pulling through. Um, so I know we are talking a little bit about the Fed and what they're doing with their inflationary policy and all of that. Um, I just saw that we'll talk a little bit about Bitcoin, but I saw that India is banning crypto, but then Pakistan is actually they're funding some. I think it's energy. I think it's used. I'm not sure what type of energy they're trying to use, but to pretty much power up mining facilities. So that's pretty interesting there. I think maybe they're looking into figuring out how to pull through if there is a global economic situation coming forth. But,
Yeah. So, and you had cut out there for a second, Mike. Remind me, what was the last person? India, and Pakistan. Say that again.
Well, yeah. India is actually they ban crypto.
Yep.
But Pakistan is actually funding energy. I don't know if it's hydro energy or I don't know exactly what type of energy they're trying to harvest, but to help with the mining of crypto, Bitcoin particularly.
That's a funny dynamic too, because those two countries have a long history, right? Wasn't Pakistan and India, they were one at one point in the 1800s?
Yeah, they were well, yeah, they were one country, if you could call it a country, a colony. They were one colony under the British Empire. And then after World War II, it broke up into two countries. Pakistan broke away and it became Muslim, which it was already Muslim, but that was a big issue between India within itself was the Hindus and the Muslims, and yeah, until now they're still like sworn enemies.
Yeah, it's an interesting dynamic because India, as of I think the last like 2 weeks, right, they've announced that they're banning cryptocurrencies. So no citizen in India can trade cryptocurrencies. And they've given them a timeline too. Like I think they've given them like 2 weeks. You have 2 weeks to sell out of all your crypto, out of all your Bitcoin, and then it's going to be illegal after that. Almost like what the United States did in 1933 with the 6102 Act, the Gold Act, where in 1933 the U.S. was going to default on all its debt, and they made it illegal for any U.S. citizen to hold and own gold in the U.S. And they told everyone in the U.S. you had to go to your nearest bank and trade in all your gold. And if we catch you with gold after this date, then you're going to go to prison. And India is pretty much doing the same thing. Whereas Pakistan, right next to them, a neighboring nation, also a historical connection between the two, is now making it cheaper for crypto miners to mine crypto in the country. And I think they have. I had read a few weeks ago that like they have quite a bit of Bitcoin miners that are going on. So the way I view that is that like it's a bet, right? The nation right now, these countries are gambling on is Bitcoin going to be the future or not, and if it is, then India right now isn't really positioning itself for that future, right? They're making it illegal at least right now, whereas Pakistan is embracing it and trying to incentivize the use of crypto and mining so that they can accumulate as much Bitcoin as they can right now so that they have, in the coming years, they're going to have more of a seat in the world stage. But this reminds me of like the whole China banning Bitcoin FUD that's been going on for years now. Like China's banned Bitcoin like 3 times now. And it's never lasted. It's always been like this event that's happened and there's some FUD in the marketplace. People get worried, they sell. A couple months goes by and then all of a sudden like people are using it again.
Yeah, but it is an issue though. It is something that's not when you have people that are skeptics that are looking at cryptocurrency and you have people that are really faithful to crypto. You have that argument, right? People that are, let's say, pro Bitcoin and crypto, they'll say, this is the way to go if you want to protect your wealth in the future, if there's a situation, all of this stuff. And then you have skeptics that are like, if the government wants to come in and ban, they can come and ban, and then this and that. And it's like both have a point here. So this is it's interesting to see it, right? Because let's say India, what if India sticks to its guns and they do that and they do ban it? That's a big part of the population. And why would they want that to happen anyway? That's another question. Why would they want to ban it? And also, if it's banned, right, then what does that say to others around the world? That, any country could come and pull the trigger and just shut it down? That's what people here in the United States is afraid of, right? And in the United States is worse because government's pretty powerful here. It's one of the most powerful governments in the world, and they control a lot of the systems here. America is looking more like a totalitarian system than a republic. So, what do you think about that going, forward with all of this?
I think that they can try their best to listen. A law is a law. The only thing that makes a law is if people conform to that law, right? And just like in China, Facebook and Instagram is illegal. You can't go on them. They have the Great Firewall up. But people use VPNs. They find ways around it, and they do it anyways. That's one of the amazing things with like cryptocurrencies is even if you ban it, I believe people will still find ways to use it in a means when they need to, and they'll stay private doing it. The only way that changes is if the government actually tracks down every single person using Bitcoin, comes to their house and arrests them, right? Then that's like a different story. But
that's not far from a possibility, though, right? The United States loves making people out of criminals whenever they throw a law into play, right?
They do. But the U.S. loves Bitcoin, man. Like that's the thing. Like they love it. They track it and trace it. Like that's why, especially when it comes to taxes and stuff, like they've already got these companies that exist, CipherTrace, the other one's Chain Analysis, where if you're a Bitcoin user and you've used an exchange in the United States, Coinbase, Kraken, Cash App, they've traced all your payments. They know like how much Bitcoin you're using, how much you have, how much you're holding. So like they don't mind it. But like India though, right? India's taking the different approach where I think they're viewing it probably as a threat, like to their national currency. And then they're taking
But that's my point, right? Wouldn't that also be an issue here in the United States with inflation, with hyperinflation, right? The United States want people to use their currency. They don't want other people to use other currencies. Mm-hmm. And if there is hyperinflation and people start ditching the dollar for other currencies, crypto being one of them, wouldn't that be now enemy number one?
Yeah, and I think this is what we've yet to see. Ray Dalio came out last week. We know Michael Burry, the investor from
bro, he disappeared.
He was on and then he came off, right? They've openly talked about, Ray Dalio is the most recent one to say that we could see capital controls on things like Bitcoin, gold, and alternative stores of value during hyperinflation in the U.S. because, the United States they're not going to just let people passively buy out of the dollar. So their take was that, they'll try to get as much of it as they can through taxation. Maybe they make it heavy in taxes for you to sell out into crypto and alternatives. But I think what countries are what they have to decide is, number one, is it going to bite us in the ass if we ban it? Because then we're not going to be competitive in the future if it is adopted, or number two, people are going to use it anyways, right? You can't stop it. You can't shut it down. You have to, by force, you have to come to someone's house. And then even when you come to someone's house, you have to physically like find their hardware wallet and then put a gun to their head and make them unlock it. Because someone can remember 12 words, which is their Bitcoin private key, and if they memorize those 12 words, you come to my house all you want. I don't know what the fuck you're talking about, right? So, but I don't know what this is what we have yet to see though. But it is. I think nation states are next. This is what we're starting to see happen. In 2017, the argument with cryptocurrencies and Bitcoin was more of like, our corporation's going to start buying it and using it, right? That the institution. Now in 2021, the institutions are already buying in. The next phase that we're going to have is how our nation state's going to react and what our central bank digital currency is going to do for this. And I think it'll be a struggle. I think that I don't think countries are going to allow it to happen easily because the main control that they have over people right now is the currency. So we're going to see that struggle.
Yeah, I think there's gonna be multiple tiers of struggle, right? You're gonna have nation states that are smaller, right?
Mhm.
Like Lebanon and Pakistan and India. India's you can't really say it's that small. Neither is Pakistan, but as a force, right, to reckon with, I think there will be that struggle, and then you have the struggle of corporations, some yes, some no, and then you have the superpowers, you know, are they going to bring in their currency if they're going to come in with something new or something old? Um, if there is hyperinflation, let's say the dollar, right? We're going to go into the hyperinflation, right, in a minute, but United States dollar gets hyperinflated. That's not the only currency that'll probably be hyperinflated, right? You have the euro in the same boat, the British pound,
Mm-hmm. The yuan.
you know, China, yeah, the yuan, maybe
all fiat. All fiat currencies, dude.
Yeah, all fiat currencies, some more than others, but you know, it's gonna be interesting to see how that plays out. So that happens. Now, if I'm OPEC and I have to use everybody else's currency in my own country or whatever it is, right? The petrodollar, you don't want petrodollars probably. Then you're gonna probably want cryptocurrency, and then that becomes the issue, right? If let's say that's a solution to selling oil in exchange for something of value, probably cryptocurrency would be it, and gold and crypto being probably the two main factors. If that happens, then you have a country like the United States that might step in and become really draconian, right? I'm just talking hypothetically of different situations here, and you know maybe people could throw their thoughts, but these are all situations that could come about. Now, if let's say that was to happen, right? Okay, let's go, you know what? Even let's go in hard on this. Let's say the United States becomes really draconian on the use of crypto, right? Let's say they start to put some sort of bans or threats. You know, like right now we're getting threatened with the whole COVID vaccine situation. So, you know, it's not far from my mind that it could happen also with crypto and anything else. If that's to be the situation, then what alternatives are there to fight against hyperinflation? Right, let's say hyperinflation is tomorrow. That's right.
Right.
There isn't.
That's
the issue.
Yeah.
So what's gonna happen? So what should I just stock up on cigarettes and just use that as a currency? You know, that's what I'm trying to get at. Like,
from a monetary perspective, in the past, it would have been gold, right? It would have been gold. And I think it still is gold today.
It still is, but then I'm not going to be shaving pieces of gold all the time, right?
Exactly.
It's too inconvenient.
Exactly. The only other alternative is crypto, and primarily I think Bitcoin right now. And that's why we haven't had one country that's yet come out and actually disclosed their holdings, if they even have any. We know that China's had a high amount of the hash rate, the Bitcoin mining hash rate, for years now. The U.S. is increasingly trying to develop infrastructure in the U.S. to become Bitcoin miners. Peter Thiel is leading up one in Texas. It's going to be the largest Bitcoin mine in the U.S. Other countries, Pakistan's announced that they're doing it. Iran has announced that they've got 1,500 miners, Bitcoin miners, actively mining in Iran. But we haven't had one country yet that's come out and has said, this is how much we actually have right now. And I think that is going to be, when that event happens, I think that's going to let us know the where everyone stands in the world. Because right now it's like, say hyperinflation happens next week, I think that the actual monetary system will operate based off of, I think there'll still be a pool of nation state currencies, just like the yuan, the US dollar, the euro, but they're going to be pegged against gold and Bitcoin. And I've heard a lot of arguments that Bitcoin, from the digital currency perspective, will be like the layer one. So, like your reserve asset layer will be Bitcoin. And then these central bank digital currencies will just be pegged off of Bitcoin holdings. So, if China has, 500,000 Bitcoin, they can create their digital yuan that will be pegged off of their Bitcoin holdings, and then that will set its value. And then if the US has 200,000 Bitcoin, the US can create, and it'll be pegged off its value that way. Almost like how gold was, almost like back to the gold, like pre 1971 when the dollar was backed by gold. The dollar was still a paper currency, but it was
but why would any
asset.
of these governments want any of their currencies to be wrapped around something of value?
Because they know right now, like China doesn't want to be the reserve currency of the world. Because when you have the reserve currency, like, I mean, look what it's done to the US. Like, it's done a lot of good for us, but at the same time, it also puts you in a position where we're like, all right, so like the US, where did the US get in trouble with the reserve currency? We started giving sanctions, right? We started sanctioning countries. That doesn't do anything for global trade. That doesn't, like, there's no one benefits from that. Whereas if you had a form
But
of,
if you have a monopoly, then
that's a
right,
different
because
story. Yeah.
you can't trade, you can't get oil without having dollars. So it doesn't matter. At the end of the day, the United States gets paid, right?
Right.
If there's a recession, the United States is still going to get paid. If there isn't a recession, the United States still is going to get paid. Why? Because we have the petrodollar. Now, any other country that wants to get oil, even if it goes up to $10 a gallon or 50 cents a gallon, the United States is going to get paid. And those countries are always going to get shit out of luck, right? Now, if you have a cryptocurrency that has value, that actually makes it equitable for the majority of the people in the world, not only nation states, but just people, how would that benefit a superpower? That is all about control, right? It's all about, superpowers love weaponizing everything that they could weaponize if they could weaponize it against their enemy. So which is why Bitcoin is it's not impossible to weaponize, but you could have weaponized. I think it's a little bit weaponized right now, right? If we look at the majority of holdings of Bitcoin, it's in the United States, but the majority of miners is in China. So there's something there, right? I don't know if you noticed that trend.
No, that's been talked about a lot. Like, so, like, if one country has all the mining power, those miners, like, mining can be moved anywhere, and then the network adjusts itself. So, like, let's just say China decided to shut off all the miners. The mining difficulty and the protocol would adjust every 10 minutes, and then, or no, it's 2 weeks. So it would adjust itself to make it easier for every other miner to mine the Bitcoin network. But think about it though. Why would China do that though? Like, if China has a majority of the hash rate, there's no financial incentive to shut them down, because you can't, even if you shut them down, it's not going to stop the network. You know what I mean? It's not going to stop.
I don't know. It won't stop the network, but just like you said, the hash rate, right? It could take a week. It could take 2 weeks. It could take 3 weeks.
Every 2 weeks. Yep. Every 2 weeks.
Time is money, and in a crisis, that could be a significant blow, right? So, and if that's the case, then right, if let's say that was to be a plan, because I think China is capable of doing anything. The government of China, not the people. I'm talking about the CCP. I think they're capable of doing anything because they don't look at the short term, they look at the long term. They'll take a financial hit right now, which is what a lot of people say about the virus, right?
Mhm.
They'll go and they'll take a hit, and then just to make a little bit of chaos out there, and if that's the case, then how would, let's say, us in America, or let's say the government, or let's say the Western powers, or other nation states, then do fail safes and all of that to prevent that? Because now, if we're talking about how countries would want to peg themselves off of this, right, this one decentralized system, which in a way would be the gold standard of, which is it is right now, of crypto, then how can you prevent it from being weaponized? And then us regular folk not getting caught up in that craziness.
Yeah, I think that it's, again, I think like for Bitcoin's sake, weaponizing, it's not controlled by one country, it's not controlled by one entity. Even the miners, like the hash rate with the miners aren't, it's the nodes that are in real control. So everyone that has a download of the Bitcoin blockchain contributes to the network to keep it safe because there's a copy on everyone's node. The miners are the ones producing the hash rate, right? If someone was to drop hash rate, then everyone else on the network would continue. And then honestly, people would see that hash rate drop off and they'd increase their capacity to mine more because they want to make more Bitcoin. But then game theory comes in, man. It's like this is what we're watching is this experiment. This is the experiment is, are you as a country going to risk not accumulating it, not buying it, not using it, and you're going to risk everyone else doing it, even from a power grab perspective? Because it's like, if a country wanted to, like, let's just even say, the U.S. here, like as a reserve currency, if the U.S. doesn't start accepting Bitcoin, and it starts getting accepted by everyone else, the U.S. is less competitive in the future. They could do whatever they want. They could say whatever they want, but they don't own any of it. It's the same thing with China, like the gold standard. China was the last country to come off of. China was the last country to accept the gold standard. They were still on the silver standard, and because they didn't come on to that monetary network sooner, they were positioned worse in the 20th century. But that's the experiment. Everything we're talking about here, I think, is yet to be seen. The experiment is, though, and the game theory is, can you afford to not use it and not accept it with the risk that everyone else does going forward, and then you're less competitive, because you're left out to the races. That's why I think it's important for people now, though, to have a little bit now, at least a little bit, because like you're hedging against that risk. You're hedging against inflation. You're hedging against your currency collapsing. You at least have value in a form of money that can't be inflated away. It isn't controlled by one government or one country, and it's we're going into a connected world. It's money for the internet. I think the question that plays out is, how do the central bank digital currencies work in relationship to Bitcoin? Like, is Bitcoin just going to be a reserve asset like gold, and then they've got their CBDCs on the side that people use? Because that could work. Like the U.S. could say, hey, we have the digital dollar, and no one can use Bitcoin, or you can't use Bitcoin, but there's still going to be an exchange rate. It's going to be like gold and the dollars today. Is like you got to pay your taxes in the digital dollar, but Bitcoin still has an exchange rate to the dollar. So like I can save in Bitcoin and then sell out to dollars or the digital dollar or whatever. I really think though that, like, because dude, going back to the interview with Vladimir Putin, like, you listen to some of these guys, they know. He said it. He said it himself. So he's like Russia isn't focused on creating a digital currency because a central bank digital currency isn't a cryptocurrency. That's what he said. It isn't a cryptocurrency because he knows that a true cryptocurrency is decentralized. It's not controlled by one country. That's not a cryptocurrency. That's why Ripple.
For a country like Russia, it's perfect, right? But for a country like the United States that has an enemy that they have focused like Russia, then what would a what would a power player within the government, within the intelligence community of the United States and the Fed look at Bitcoin when you're seeing people like Putin and maybe others looking at it as, hey, this is perfect because now we are less dependent off of a fiat currency that could be manipulated by the U.S. government, which has been weaponizing their currency against all of us.
Right.
Then what would America, you think, would do then, right? And I think what you said about having the dollar and then having it separate and then paying your taxes, I think that probably could be more or less the near future of how it's going to work because it is pretty much like it is now. But if it gets to a point that geopolitics keeps heating up the way it does and hyperinflation kicks in, then I think currency is going to be like the main focus, right? And then we already have propaganda coming in saying that, Biden saying that, Russia meddled in the elections again. Meanwhile, they said that that the elections were completely fine, but now they're saying the Russians meddled in it. They keep looking for somebody to instigate something.
Mm-hmm.
And if there is hyperinflation, then what does that mean for currency, digital currency, gold, and all of those type of assets? For a person like myself and a person like you, we're always looking at ways for us to protect against any of these situations that come about in a crisis. So I know a lot of people also have the same questions like, then what the hell should I do? These are different scenarios. We have scenario A, that things will continue to go along the way it does, right? The perfect scenario here is that Bitcoin becomes like the main currency in the world because it gives everyone the power to use it, fine. And that's situation A. And so if that happens, then what you should do in your life to actually take advantage of that, right? That's A. And then you have B, that it stays the way it is right now. And then you have C, that, government regulations comes into play and they start, to do a couple of things. And then you have D, that they actually ban it. You have all these scenarios, how to prepare oneself for all of those. That's the question, right? I think we should, go in, next couple episodes, talk a little bit about that because I'm sure we all have these questions. And I get these questions all the time. I'm always talking to people, family members, and they're all like worried about hyperinflation now because they keep hearing us on this, right? We're always talking about it. So they're always asking me like, what the hell's going to happen? Then what should I do with my 401k? Or should I go and buy a house and put my money in that? Or how much should I buy? How much should I not buy? Should I buy a couple different currencies? Everyone has these freaking questions, and I have these questions as well, and I know you do as well. I think that's something that, when we hear Powell talk about that they expect inflation to, move forward into 2%, a little more above, that tells me we're probably going to 5% soon. Going into 7%. We're going into 10%, right? Maybe we should talk a little bit about that, but, we should all start pulling some thoughts here. And guys, please, send over any comments, emails going forward about this. What are you guys' thoughts about how to prepare for X, Y, and Z?
Yeah, I think, and I'm going to pull up some charts here too, but like the main thing that people need to know is that you need to put your money into assets that aren't going to increase in value along with the dollar, right? Because the dollar's inflating. So anything priced in dollars or that is exposed to dollar will get more expensive. Stocks, real estate.
So if that's the case, all right, now you said
bonds aren't useful there anymore, right?
What do you think is going to happen first? You think hyperinflation is going to kick in first? Bubble is going to burst?
I think that hyperinflation is going to kick in first, and then it's going to lead to a bubble and a collapse.
Yeah.
I think that we're going to see prices continue to increase, money supply increases with it, and then I think that's going to lead to the ultimate collapse.
Yeah, because we're a consumer-based society, so if things become more expensive, you can buy less. People are going to buy even less,
Yeah.
And then that's when you start getting these trickle downs.
Yeah. And even you see in real estate, like real estate it's not a hedge against inflation. What the problem is this, we're talking about the reserve currency inflating. In the past, with inflation with other countries and stuff, real estate would have been an okay move. Like we saw Venezuelans and Argentinians and stuff buying real estate in the US to preserve value, but the dollar is inflating. So home prices, so like I actually have a chart. I actually pulled up home prices here too. Right. So if you look at, so this is home prices, right? Median home prices in the US on a nominal level. So this is, they say the orange line is inflation adjusted, the median, and then the blue line is median home price. So if we just even look at, right, all of these home prices, so home prices go up. This is 2006, 7, 8, right? So this is the housing crisis. And then this is the recovery. So we know that in this period right here, this period over the last 10 years, home prices have gone up. But during that same period, money supply has gone up, right? So home prices are going to go up as more money is being created. And I think that's what we're seeing now. Is like right now, home prices are on a tear. They're continuing to go up, up, up. So home prices go up. This is education was another thing, right? We know we see education. We know we've seen the inflation numbers in education. So over the last 20 years, these are private schools in green, out-of-state schools in blue, in-state schools in red. But education's gone up over the last 20 years. So what you need to do is you need to look for an alternative an asset that's not correlated to the dollar that you can actually hold value in. And that's why now we're coming down where the only things that are left are like precious metals or Bitcoin. But even in that space, the gold price hasn't really moved at all. The gold price hasn't really moved.
Yeah, and what's up with that? What do you think is going on there? To me, there's something very weird I don't get. Because usually the price of Bitcoin and gold were correlated a bit for a while. And then now there was even a little dip in gold recently.
Yeah.
Not too big, but there was, and Bitcoin's at almost $60,000.
I think
there's something there with gold.
Yeah, it's that, and I've read this from a few of the actual gold miners themselves. It's that people are deciding to allocate more to Bitcoin than they are to gold. So anyone that's had gold still has it, right? They still hold it. So say a firm has, 5% in gold, and they say that they want to increase their exposure to 10%. But instead of buying 5% more of gold, they're buying 5% more in Bitcoin. So they're buying the alternative now. Paul Tudor Jones was the one that also said this as well. I think it's good to bring this up. Paul Tudor Jones had a famous statement where he said, he's a gold investor too, but he says Bitcoin's the fastest horse in the race. And what he means by that is that when you're trying to hedge against inflation, you could buy gold or you could buy Bitcoin, but because of Bitcoin's market cap is so low right now, it's going to get you higher returns during that period. And you see here, yeah, so you see here, this is back when it was 13. Cryptocurrency hovered just below 13 on Thursday. And he said it's rally still in the first inning. The new strategy has investors looking for new inflation hedges as the economy recovers, and Jones views the cryptocurrency as strong. I came to the conclusion that Bitcoin was going to be the best inflation trade. So this is Paul Tudor Jones. Paul Tudor Jones is a really famous billionaire hedge fund investor, second to Ray Dalio. So I think that that's what you're seeing is that just Bitcoin's market cap compared to gold is smaller, and people are deciding to purchase it because they see a higher return in the future. So I think gold, like what I see happening is people buy Bitcoin first until Bitcoin's price gets to, $100,000, $200,000 a Bitcoin, and then they'll start loading up on gold. And I think that's when we'll see gold pick up and start going to these new highs that we've talked about, $5,000 an ounce.
You know what I don't understand, which I'm trying to figure it out. Why corporations like Apple are holding cash? You would think they would probably, unless they know something we don't know, but that they would try to prepare for hyperinflation. But they have all this cash at hand. Do you think that they might have their algorithms saying that there might be a bubble first before hyperinflation kicks in, and they prefer to have the dollars there before
Just scoop it up and buy it.
Yeah, scoop up a bunch of assets before buying, before getting rid of it.
Yeah, it's a good question. And I think Apple, like a lot of people in the crypto space, are waiting to see who, like now that Tesla's bought into Bitcoin, there's a lot of people that are asking the same question to Apple. And Oracle was the last one. People were waiting to see whether they were going to announce something. I think that they're probably so large of a company and they have so much cash that they're not going to be the first mover. I think they're waiting and they're watching. They're waiting to see how the market plays out, what happens with inflation. And then I wouldn't be surprised if we start to see moves with them over the next year or so, because it gets to a point where if inflation's going to work out like we think it's going to, and the inflation numbers are going to be higher than the Fed says they are, and $1 billion today is worth all of a sudden the same as like $500 million next year, they're going to have to do something with that cash.
Yeah. I would probably think they're not doing anything maybe because for national security interests, right? That could be another thing.
That could be another thing.
Right, because if they start unloading their dollars,
yep,
which they have so much of, into like crypto and gold,
yep,
then what does that say to the world, right?
Yep, I agree.
Which is weird, right? To be in that position that you can't freely move your money around.
Yep.
To save yourself. It says a lot.
Yeah.
It says it just like we keep talking here, and it's just like more and more just comes to light. Like these are all the things that. This is why we can't take anything in face value when we look at stuff in the media. We watch people like Powell talk like he did yesterday, because we don't know what the hell's going on completely.
Yep.
There's a whole bunch of stuff here. There's national security interest stuff here. You got corporations doing power plays. You have all this shit in the background, and then we're over here, we're trying to figure it out. We're not getting the straight answer. All we could do is throw ideas out there, and hopefully any of these stick. But when you actually sit down and talk about these things, it's like all these things are possible. And then it's like I can see why maybe Apple hasn't moved their money, and it shows. It's like that's dangerous though, right? As a stockholder, you would want Apple to make its first move to protect my assets, right? If I have assets and a lot of it is Apple or blue chip stocks or the NASDAQ, you would think that they would protect against any of these things because, hey, you're shareholders.
Right.
But if they don't want to move because it's a national security problem, then it's like, okay, then what are they worried about? Right? Why would the United States be worried? And it's because they know hyperinflation might kick in. And if that's the case, it's like, well, then what the hell? What should we do at the end of the day? What should we do to protect against any of these, right? Because, man, in my opinion, yes, go with Bitcoin. That's what I tell everybody. Go just buy Bitcoin, buy gold, buy silver. Purchase things like food, seed, water, even freaking go buy a Rolex if you got some dispensable income. Buy yourself a Rolex, gold preferably, buy yourself things like that rich people will still buy from you.
Yep.
If push comes to shove, you know, buy yourself a freaking Lexus that doesn't lose a lot of value. Buy some televisions, buy a couple computers. You know, it sounds crazy, but when you go look at countries like Lebanon and Russia, that's what they did when inflation hit. So these are just things that come to mind, right?
Yeah, you need that all. You need something that's going to be valuable enough where once the new currency comes in, once the old currency goes away and the new one comes in, you can still sell it for like the same kind of value. So, yeah, I think that's exactly it. And I think one thing I want to talk about too quickly is like the inflation numbers that we hear about in the US aren't actually the inflation numbers. Like Powell says 2%. They've always said
That's horseshit.
it's not that's not the real number. Like the formula that goes into calculating the inflation numbers are skewed. They don't include real estate, they don't include healthcare, they don't include education, they don't include a lot of things that we've seen inflation in over the last 10, 15 years or so. So you know, like
Consumer goods. It doesn't go against consumer goods.
exactly, yeah.
It's not realistic.
And now we might start,
dollar.
yeah, and now we might start seeing it trickle in to consumer goods, like your grocery prices might go up and all that stuff now, but like it's not capturing that real number. Michael Saylor, who's the CEO of MicroStrategy, he's the company. They've bought over $2 billion worth of Bitcoin now for their treasury to provide shareholder value and to hedge against inflation. He thinks that the real inflation number is closer to 20% in the US. And he's calculating that based off of financials. Because it's like, if you think about it,
Common sense, right?
yeah, because if you look at, all right, so this is a chart of the Dow Jones over the last 10 years, right? The Dow Jones over the last 10 years has gone up, right? But then I got a chart here that's the debt to equity for the United States. So what this chart represents is how much debt are companies using to finance their operations, their business operations, compared to their equity. And you look at this and you see it's 95%. It's in the 90s over the last 10 years. So that means that all of this growth in the stock market is financed from government debt. It's not because the company's done well. It's not because the company's been profitable. It's not because the company's great. It's because they've been financed by the U.S. government, the Federal Reserve Bank. So what he's saying is that this is the real sign of inflation. Financials, healthcare, education, all of these numbers that are not included in the analysis that the Fed does. And it paints a perfect picture to me. And that's why now...
So to pretty much break this down, right, Bonnie style, pretty much corporations, the huge industries like medicine, right, health, services industry, all of these industries, they're getting loan money from the government to fill in their financials to show profit at an exorbitant amount, right?
Mm-hmm.
And allow to keep prices at a regulated amount so that whatever it is that we're buying doesn't seem like it's going up. It's pretty much shows a false narrative that there isn't inflation. Inflation is at only 2%, which is natural, their natural basis, right? So people like you and I, when we go through groceries, it doesn't seem like it's gone up, extraordinarily. It seems like it's pretty normal. It's going up a little bit, but it seems stable. But it's actually because they don't have to charge more at the store or at the hospital or at the university because the government has been giving them that portion. It's pretty much, it's like the government has subsidized everything on the back end.
Yes. And they've said and they've made it seem like it's the best economy in the world, but it's because they've been giving the money to the corporation. Yes.
Exactly. And that's why yesterday you heard that Powell said that the whole corporate bond market will continue. They will continue to do that.
So they're buying bonds.
which is why he's saying that inflation will continue to just grow slowly, but their target is to be a little bit above 2%.
Yeah.
For us, it seems like it will be 2%, but it's because they will continue to print and give to them on the back end to keep prices low artificially.
Yep. Yep.
Until the bubble bursts or hyperinflation hits first, either or, then that can't continue.
Right.
Which is when we will really see the veil would come up.
Right.
And we will see that inflation has been going on for a long time.
Yeah. And that's what it is. You know, this again, and you can see it here. So this is the money supply chart. So this is how much money's been created, how much money the Federal Reserve's been created. And again, for the people listening that might not know, money isn't really, it's not supposed to be created by government. That's not really what like money is. Like, it's just that since 1971, over the last, 40, 50 years, governments have been allowed to create money. And as long as they don't create a lot of it, right, you see here in the past, it's really not that bad. It preserves its value. You're able to continue. But then once you get to a threshold where they have to create a lot of it, it makes all of your money worth less. So we see here that the government from 2009 all the way until today, and you see that big bump, has been creating massive amounts of money. This chart is the velocity of money chart, which we've looked at in the past. This chart represents how much money is actually being traded through the economy at any given time. So a lower velocity of money means that there's no money moving through the economy. No one's spending money. No one's doing any of that. So you see here that there's been all this money created in the last 10 years. And you see here that there's been less money that's been flowing through the economy over the last 10 years. So that right there tells you that there's a small few percentage of people that get all the money and the rest of us don't. We all know that. And then you look over here and you look at all of this and then you come right here and then you say, but wait, if all of this money's been created, and no one's spending money, how the fuck? And then we look at this and then you say, wait, all that money's been given to the corporations because they've been financed through debt, through the government.
And then we go back to Apple that has about how many billions in cash they're holding.
But then the government gaslights. But then they gaslight us, right? They gaslight us and they say everything's great. Everything's wonderful. You're all doing fine. They're telling us we're doing fine as people are struggling to pay off bills and debt and all of this stuff. And it's not your fault. It's really not everyone's fault. Like, that's what I think people need to realize too. You look around in society, you look to your neighbors, you even look down the street at the person that seems like they're doing better than you are. And the fact is that like the wealth gap is so bad right now that like all of us are in the same boat. And I think that's why the social unrest is happening. That's why all these protests around the world are happening. That's why
the National Guard is still in Washington, D.C.
National Guard still in D.C. That's why there's populism in politics and there's the extreme right and lefts. And the news and the government is making you think that it's because of racism or it's because of inequality or it's because of the COVID. It's to keep us busy. No,
they want to keep us busy.
Exactly
they
this.
Keep us, yeah. They want to keep us busy and fighting amongst ourselves about genders and racism and all of these things. I'm not saying that racism doesn't exist, guys. Of
course.
But come on, not the way that is, being portrayed. They're making it seem that, literally everyone's getting lynched out there. I'm Puerto Rican and, they're acting like I'm being every day subjugated to, I don't know. I live pretty well. I live a good life. I'm not complaining about that. What I'm complaining about is the fucking government and the system that literally doesn't allow me to, do better than I could do and shit like that, right?
The term
I can't, live a normal life because I'm on lockdown because of some freaking BS that they're trying to push on us. I'm not saying that the what's going on is complete BS, but the narrative that they're feeding us is all these things that's going on, and they just have us sit in fear. While in the back end, they're playing these power moves against us, and they're pretty much raping everybody financially. They're raping everybody. That's what's going on. They think they come over here and they throw you $1,400 and a $30 one-way ticket to freaking Miami, and that's their gift. That's their gift to us. There you go. Here you go. Throw a dog a bone. Go have some fun. We're taking care of you.
I saw a statistic that had said the $1,400 that everyone got in stimulus money, in the back end, the real number that you're going to have to pay out of pocket through inflation is $46,000. So you get that $1,400 and you think and like people are like, it's good. It's because they asked, they need it, but it's hidden. Inflation's a hidden thing.
It's a bandage.
The cost of that $1,400 is really $46,000 that you're going to have to eat out of your pocket at the end of the day.
You're going to have to work extra hours, a couple extra years to pay off.
And that's why it's hard, because from a policy standpoint, it's hard to tell people that, like, you're better off not getting, like, we were better off not creating the stimulus money and just figuring it out from another way to actually do better for people, right? But it's hard.
It's hard though, right? It's hard because you already showed the graph, the past 10 years. What have we been doing, right? As a country, as a monetary system. So does it even matter, right? If you really think about it, does it even matter? Because people say, oh, well, if the government has already printed trillions of dollars and we're already in debt and we're screwed, then you know what? I want my $1,400. That's what people are saying. Some people are just like, well, we're already fucked. So, if I go bankrupt with a $50,000 in bankruptcy, why not just go into a couple $100,000 in bankruptcy? That's what people think.
So there's an interesting play there, Mike. And this is what Michael Saylor from MicroStrategy is betting on. And this is something that I think people should know too. Assuming that we're going to go through hyperinflation with the dollar, everything denominated in dollars is going to become more expensive, right? But if you have an alternative store value, everything denominated in dollars is going to become cheaper. I'll give you an example. I got a buddy from Venezuela. 5 years ago, he said to me, right as the Bolivar started hyperinflating, hey, Joe, there's a scheme going on. We take out loans in Bolivars, take out a $100,000 loan in the Bolivar for whatever from the bank, convert it into dollars instantly, and we're just going to wait. And what happens is that the dollar retains its value because it's the reserve currency, but the Bolivar, as weeks go by, inflates. So that exchange rate to pay back that loan, the $100,000 in Bolivars, it becomes cheaper and cheaper and cheaper and cheaper and cheaper in dollars, right? To a point where it only costs maybe $10,000 to pay back the Bolivar loan, and you keep that 90 grand. That's an arbitrage right there. The same thing is happening right now with the dollar. So what Michael Saylor is betting on is he's saying, I'm taking out loans in US dollars, I'm buying Bitcoin, and I'm doing that because dollars are inflating, but they're becoming cheaper in Bitcoin terms. So I see the same thing happening, and that's why like the US is probably going to put capital controls at some point. Because if you have debt in dollars, if you have a mortgage in dollars, if you have credit card debt in dollars, but you hold Bitcoin or you hold another asset that's going to retain its value, I'm not a financial advisor, but we might be at a point in society where I'd say, fuck that debt. Buy more, keep holding on to the alternative, because that debt 5 years from now, 10 years from now, it might not be debt. It might just be, thank God I didn't pay that off in the past and I just held on to it and I held my Bitcoin because now it doesn't cost anything to pay back. Does that make sense?
Yeah, that makes sense. So, at that point, though, will people even be paying their debts?
Well, right? We might see a debt jubilee.
It's crazy. A lot of stuff that's going on. It's like what's the bubble that's gonna pop first, right? Is it the real estate bubble? Is it the student loan bubble? Is it the car loan bubble? Is it what is it? There's all these things.
Bond markets right now is the big one, I think.
The bond market people keep talking about.
Bonds are big. You're talking about bonds because the bond.
So then
the
so the
yields.
bond market bursts, then pretty much, and it's just cycle. It just goes in. Everything else gets screwed too. Right after that,
Pensions, 401ks,
Yeah.
municipalities, so municipal debt, so city bonds. So yeah, so the moral of the story though is that like Jerome Powell gave this speech yesterday, and he said, unemployment's been bad, but it's looking better. There's vaccinations that are coming out now, so our outlook on the economy is going to be better for an opening up. The inflation number is at 2%. And again, inflation, what's inflation? The inflation's the creation of money. How much more money are they creating than not? He said it's around 2%. We feel like that 2% is going to be held in the future, but in the short term, in the near future, we're going to have to raise it a little bit. But we think it's going to come back down. They said that they see it coming back down to 2%. But after we just looked at all these charts and stuff, you start to see that that's not the truth. Inflation's much higher. Dollars are becoming worth less and less and less, faster and faster and faster every single day now. And you as a viewer need to start understanding that, the money that you're looking at in a bank account, the dollars that you're looking at in your 401k, the dollars that you're looking at under your mattress, those are losing value faster than they ever have in the history of the US dollar. And there's no signs right now that that's going to let up. And it's because of the national debt. It's too high now. We don't produce enough a year in the United States to even pay off the debt. It's because there's still stimulus checks that are coming out, $1 trillion stimulus checks. Like I'll say it on video now, like we're talking about the early stages of hyperinflation now. The end of 2021, this is the 50th anniversary of the US dollar. And I question whether the dollar is going to make it past its 50th anniversary. So you need to start considering alternatives. Those alternatives are like we talked about: Bitcoin, gold, silver, anything that physical that's going to hold its value when the transition happens. Like Mike talked about, certain jewelry, Rolexes, goods, anything that you think is going to hold its value in that transition, you need to start considering. Because what's going to happen if you keep holding your dollars is that you're going to look at your bank account, and in next year, you look at your bank account again, those numbers, say you had $100,000 in the bank, you're still going to see $100,000, but that money is going to be able to buy you less than it did now. And then you look a year later, and you're like, this has happened in Greece, it's happened in Argentina, Venezuela, it happens in Zimbabwe. You're going to look at that money, and you're going to say, I worked my whole life. I did everything I thought I was supposed to do. I saved like I thought I was supposed to save. But you have no money. All that money that you're looking at is worth nothing. That's what we're talking about. So it's really important that people listen. And, I think that's why we continue to talk about these trends, because it's real now. It's getting real. We were talking about it in 2019. And in 2019, early signs of it, it was more hypothetical. Once 2020 happened with COVID, we really started to bring it up again more because we
were right, because we've been talking about the money printing and how all these corporate bonds were just being bought up like crazy. What we didn't highlight at that moment was that's pretty much was a cover for the inflation that we have, that we're not even still seeing. We see it a little bit, every time I go to the groceries, it's costing me a little bit more. Every time I'm going, it's costing me a little bit more to fill up my gas tank. But now, when you actually start seeing, the corporate bond market, it's like, oh, shit, this has been going on for a long time. It's just the bubble that needs to be burst to actually see this hyperinflation in plain sight. Yeah. We just don't see it in plain sight. So, I think the community needs to keep spreading the word. It's not to get too scared. Panic is good. Don't let it, overwhelm you. But I think we need to prepare. And, I don't think we're trying to be negative here. I think we're trying to be realistic.
It's all realistic. This is not. It's the objective truth. Like there's no fear mongering. It's
the truth, man. It's like if we don't say this, then we're lying.
We're
literally lying.
Yeah, I mean, if you don't believe us, just listen to the billionaire investors.
Yeah, look at Ray Dalio. Look at all these guys, man. Peter Thiel. Look what they're doing. There's something there. They know what's going on.
We'll leave it
So
on one last quote too. This is from Ray Dalio this week talking about what's happening. History has shown that there are very large risks in holding interest earning cash currency as a storehold of wealth, especially late in debt cycles. So what he says here is that history has shown that when you're holding cash or the currency, that's the main currency, as your storehold of value, so your money in your bank, that's your wealth, that's your value, right?
your
That's
401k
all it
and
is.
your
That's all you
stocks.
have.
Yep.
Um, risk that there's risks that there's large
As
risks
the
in that.
main.
Yeah,
Yeah, there's a huge risk of you taking your money and keeping it stored away to accrue interest. When you do that in the late part at the end of a debt cycle, which if we talked about cycles before, we talked about that we're at an end of an epoch, we're at the end of an age, we're at the end of our of a financial and monetary cycle. We're at that point. Ray Dalio is saying that we're at the end of a debt cycle. If you're holding cash, interest bearing cash at the end of a cycle, you're at the wrong. You're doing a great mistake. So, what does that say? This is a billionaire, one of the richest men in the United States, telling you this straight up. Look into it. Start figuring out what you're going to do. Look into your 401ks. Look into your Roth IRAs. You look into your stocks and bonds. Look into every little thing and start shifting money around. Start shifting money around. Not a financial guru or anything like that, but you need to figure it out. We all do, because at the end of the day, we have the facts there. The facts are there. Start protecting against that, all right? That's the best thing that you could do right now before the shit hits the fan.
yeah, yeah. I agree. Cool, man. All right. What do you think?
All right,
That's it for today?
guys, you got.
That's it.
I think that's enough. Go take some Xanaxes.
To the moon. That's it.
To the moon.
All right, y'all. That's gonna be it. Again, we're doing the weekly things. I think it's nice. I like it. So, we'll catch you next week. If you liked what you heard, or you have any questions on anything we've talked about, leave it in the comments. And then if you want a private message, you can either DM us or you can hit the Telegram link. So we do have a Telegram page open, so you can come in and chat with us directly one-on-one. We can answer any questions you have there. Definitely subscribe, definitely follow, and share with anyone that might be wondering what the hell to do with their money, or if they're worried about inflation and stuff. We're just trying to get the word out there and the information out there. So, we appreciate you watching, and we will see you next week. Peace, y'all.